Welcome back to another video. In this video I'm going to be breaking down candlesticks and candlesticks pattern. Alright, so let's start with breaking down one single candlestick at a time. Alright, so here I have the first example of a candlestick. Right, so this is a bullish candlestick, which means price went up. So price opened at, let's say, around $90. It closed at around 95. All right, this is different from a bearish candlestick, which price opened at $90, for example, and closed at $85. All right, so this is the first thing you need to understand is how this candlestick works. Right, so candlestick price would open over here right at this area. It will drive down, create the low, and then for a bullish example, it will come up, sometimes make this high, and then close at a certain price. All right, so that is the highest point of a bullish candlestick. This is the lowest point of a bullish candlestick, and this is the closure. All right, now the same will happen if the candlestick went bearish. So the same structure happens, right? So you have the open, but this one, instead of closing higher, it will close underneath, right? So the open, let's just say, is the same, and then price drives up, creates the highest point of this bearish candlestick, pushes down, creates the low, and then closes. All right, so this is how the bearish candlestick works. All right, now let's get started with the pattern. So these are 5 different ways a candlestick could work, right? These are all closures, right? So a candlestick can look like this. Let's just say this is a 1-hour candle. So this 1-hour candle can look like this for the first 15 minutes, but it could fluctuate all of like this, right? And sometimes, as you'll see, candlestick will go crazy, all right? But so these are closure examples. So this is open market. This is right now we're 1256, and gold is fluctuating. And this candlestick can go crazy. It can, hold on one second. This thing can like shoot up like crazy like this, and then all of a sudden turn bearish in matter of minutes. And I've seen this happen before, and I know this happens. All right, so let's get started with live examples. All right, so let's start with this first example here. Let's get closer. So this first example, as you can see, is a bearish doji. The same exact model as this one, right? So this bearish doji here just means that price drove up, created this high, and then closed right over here. This means if the wick is long on top, this means selling pressure. This means that there are a lot of sellers entering the market, and the next move will be for price to come down. All right, so I'll say 95% of the time when a candlestick like this happens, price will go down. Right, so as you can see again, another confirmation that price would go down is basically this area of resistance here, right? So you have this area of resistance, you see a doji, right? So you know that this candlestick means that selling pressure, and you have an area of resistance, price is gonna come down. All right, now same example will happen if you see a bullish doji over here, where the wick is basically the wick is longer, the body longer than the body, right? The body is this, and the wick and the legs are very, very long, just like this one. The legs are longer than the body, which means if the body is up in green, price is gonna come up, right? It's gonna push price up, which means buying pressure, which means price came all the way down here, but then when it closed, buyers were in control of the market and price started to move up. All right, now this other example here that I have is this very, very bearish candle here, and it basically has no wick on the bottom. It has like a tiny leg over here. This means there were a lot of sellers inside the market, but the volume was so high that it basically ended almost all of the sell orders. All right, and then price just started to form a level of support here. If I go to a lower time frame, and then this next candle pushed price down, went up, closed bullish doji, and then moved price up. All right, so let's move on to the third example. This is the third example over here. Another bearish doji. As you can see, price went up, collected some sell orders, and then sellers entered the market. There were a lot of sellers in the market, and then closed bearish, and price just started to fall after that. All right, so our next one, let's go to the fourth example, is this bullish engulfing candle here, right? As you can see, there's one, and there's another one here on the left, following with a second one, and then a third. This means that there are a lot of buyers in the market, right? So if you see a big candle like this, and usually green, you have to wait for price to come down, collect some more orders, and then push up. As you can see, there's 1, 2, and then you see price pulling down again, 1, and then price pushes up. All right, so the bullish engulfing, which is this one, can be this one or this one. They are both meaning that there are a lot of buyers inside the market. You won't be having like a big bullish candle like this, and then after that, looking for a sell, because what will happen is price will take you out over here. All right, so you have to wait for price to come down, collect some more buy orders, and then you move up. Now let's look at this engulfing candle here, right? Same thing, no body on the bottom almost. The next one will eventually go bullish, and then you have to wait for some candle to close beneath these closures, this bearish closure here, for price to keep coming down. All right, so once you're in the market for quite some time, you start to understand all of these patterns, and you start to see that you need them to make better trades. All right, so 3 more examples here. This one is a very specific one, which indicates basically reversal or indecision, right? When you see a candle like this with the body, so this is a bonus, right? You see a candle like this with a wick, and then a strong body here, actually a small body. Let me make it with a like this, right? Just like this one, means indecision. Most of the times is when price went up, created this indecision candle, and then price went back down. All right, so you have to pay attention to all of these candles for you to act and make money on it. All right, so next candle I'll say is this one over here. So you have a doji with the wick is higher, it's bigger than the body, and you have an engulfing doji, which means the seller are in control of the market. All right, same thing over here. You have another doji with the wick bigger than the body, and price is just pushing down. And what you see after is price actually melting, right? Price pulling down. So next, this one over here, we have a, not an engulfing candle, but you can see that you created one bullish candle, 2 and 3 above the wick of this previous bearish candle, which means that again, price bullish momentum is happening, and the buyers are in control of the market. And then again, same thing. I have a very, very like engulfing candle here on the left, but I'm not going to enter for buys over here because price is pulling back down to collect some more orders for you to enter on buys when the pullback happens, and then you enter for the buys. All right, so we have 3 more examples here. This is a very interesting, this is a bullish doji over here, which means that the buyers were in control of the market, but price could not hold here, so sellers started to enter the market, and then price closed, candle closed, another bearish candle here, one more bearish candle, and then price started to go down. All right, so there you have it. You have the bearish doji and the bullish doji, which also means sometimes as a reversal, right? So this is a now different bullish doji when you're on the bottom. So this bullish doji is on the top, is at a resistance, and this bullish doji over here is at a support, which means again reversal. So both of these are reversal candles. This one is pushing down and this one is reversing to the upside. All right, so when you understand that, when you're a support and a doji happens, you got to be entering for buys, and when you're a resistance with a bullish or bearish doji, you got to be entering for sells. All right, and this is where you start to pay attention to. Again, you have basically not so much as a strong resistance here, but you have a doji, right? You have this doji, and price just reverses, doji reverses, pulls down, but you also have a level of support. Now, after this level of support, you see a bullish engulfing candle following another bullish engulfing candle, and following another bullish engulfing candle, literally engulfing all of these candles on the left, which means that buyers are in control of the market, right? It's very, very simple. And then what do? Do you enter here at a high? No, you wait for price to pull back to this level. Again, it's going to collect orders and move price up. All right? It's very, very simple. So this is basically an engulfing candle, but again, it's inside this range of support and resistance. So you don't really have a trend going on until price breaks above or below this trend and does, a big push. So these are, I think that was it. Yeah, those were all of the examples of the candles. Once you understand how the candle how they work, and you start to see patterns inside the market, you start to be entering better trades and eventually getting better results. All right, so this is basically a short video about the candlesticks and candlesticks patterns. So if you like the video, make sure you click the like button and subscribe for more content. This is, I believe, part 4. We're going to be doing 10 videos of this technical analysis series. All right, thank you for watching.